Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. So it's all about the labor market this week. We had the jobs report on Friday morning, ADP report earlier this week. But the one I wanted to focus on is U.S. job openings has come down to a 2.5-year low. Also, inflation, the other big component of the Fed's decision in 2024 of when to cut rates. Let's talk about the components that are driving it, specifically shelter. If you take that out, core CPI is actually already down below 2%. And then finally, mega cap stocks have outperformed pretty much everything across the board in US equity markets in 2023. They're starting to slow, but other stocks are picking up the slack and starting to outperform. We're seeing equal weight index outperform cap weighted. So US job openings at more than a 2.5-year low in October. This is the strongest sign that higher interest rates by the Fed are starting to put pressure on wages and the labor market. This report also showed that 1.34 vacancies were available for every unemployed person. That is the lowest since August of 2021. We have talked about this in the past. This figure had to come down before you ever saw a significant jump up in the unemployment rate. We're starting to see that more and more. Again, the lowest number of job openings since 2021. This is going to continue to put pressure on the Fed to start really considering when to start cutting rates. We're seeing expectations get pushed up sooner and sooner because of data like this over the past week. So mega cap stocks are slowing as other stocks are rallying. The S&P 500 cap weighted index, right? The S&P 500 is market cap weighted. That is the biggest stocks have the largest weight. That's your typical S&P 500 index. The S&P 500 equal weighted index does exactly what the name implies. It basically gets rid of this size weighting and says every stock is equal among the S&P 500. On the chart here, we have what's called a relative strength line. It's very simple calculation. It's just the closing price of the S&P 500 typical cap weighted index divided by the S&P 500 equal weighted index. And the direction of this line tells you exactly which index is outperforming. You can see that very clear uptrend over pretty much the entire year of 2023, where cap weighted index is led by those big mega cap. You've all heard about the Magnificent Seven, all the AI revolution. A lot of those are tech, mega cap tech stocks outperforming this year by a very large margin. We've also seen the discrepancy between growth stocks. Again, those are mega cap tech stocks outperforming value stocks. That has slowed down. Look at that dip here since mid-November. Really, since that lower than expected inflation report, we've continued to see again some of the inflation readings, an increase in expectations that the Fed's going to cut rates. We're starting to see other stocks pick up, and we're starting to see these mega cap stocks, mega cap tech stocks start to slow down. At least over the past few weeks, we've seen those stocks, the Magnificent Seven, basically flat since November 15th, when the S&P 500 equal weight is up north of 3%. So something to monitor, a little bit different than anything we've seen so far this year. And then finally, core CPI without shelter. So what is that, right? Core CPI, again, remember that's X food and energy. The Fed typically pays a little more attention to the core components because it's not as noisy as food and energy. Oh, by the way, energy's been plummeting here recently too, but let's not talk about that. Let's take X shelter, right? Take out the shelter component. That's one of the largest components of the services category within the core CPI inflation index. And that's continued to be very high, even though we've seen some alternative data sets from, for example, Zillow rent prices and home prices already come down. The rental component of CPI is still very elevated. But if you take that out, look at that on the chart. If you take out that whole shelter component, you can see core CPI is actually down below 2%. So there's no doubt shelter is having a big drag or impact on CPI being higher. Why is that important? Well, if you look at leading indicators, such as home prices, such as alternative data sets around, for example, Zillow rent prices, as I mentioned, those have already rolled over significantly, and most economists are expecting this component to continue to decline over the next 6 to 12 months. So something to watch there. CPI inflation data continuing to look like it's coming lower and has been going lower a little bit faster than people expected. So finally, Amazon Q, right? The race for Microsoft's Chat GPT. We've seen recently Google coming out with their Gemini. Amazon's come out with theirs, right? The arms race has begun for artificial intelligence. Time will tell where this arms race is going to lead us. And you've got Elon Musk probably a little worried based on some comments he's made over the past couple of years. But Amazon Q, AI-generated assistant, really tailored for work, right? So it's got summarizing documents, tailored for corporate environments. It still has a programming assistant, which is a little bit similar to ChatGPT, also centered around support tickets, AI generation. It will be interesting to see the impact specifically around the corporate environment. We're going to continue to see products and services like this evolve over the next 5 to 10 years. It'll be fascinating to see how fast this happens and how much impact it happens over the next few years. But Amazon Q has joined the race. All right, with that, I want to thank everyone for watching, and I'll see you next time.